Hi guys, it's Marissa here from Rise High, and today I'm joined with Elias Farah, who is one of the top South Australian commercial and property lawyers in the States. So really happy that he is here today. And today we're talking all things land tax. I'm sure that you've heard a lot in the media about land tax, and obviously it is a big topic at the moment. We obviously represent a lot of property investors within our client base and people that aspire to be property investors, and we really look out for our clients. So we want to make sure that you understand all the details. So that's what we're doing here tonight. We're going to just have, the next 15 minutes or so, we're going to be chatting to Elias. We're going to get all the details about what it means, and we really would value your questions and comments as we go. So please feel free to leave the comments below and we'll try and answer them throughout the session. Hi Roo, thanks for joining us today. So firstly, welcome Elias.
Thanks Marissa.
It's obviously been an interesting couple of months with all of these land tax proposed changes. Let's just sort of step back in time and just talk through the background. I might just give a brief introduction to the background, and please feel free to add in.
Sure.
And then I'll be really keen to get your thoughts on where we are now and what things look like. So I guess, we had the state budget, and at the budget they announced the decision to bring the land tax rate down from 3.7 to 2.9, which was one of their election promises. Is that correct?
Yeah, that was from last year, correct?
Yep, but the surprise of the budget was the aggregation.
Correct.
And basically what has happened since the budget, so it's been a couple of months, and the government has been said that they've been consulting with industry. I know that Elias has been working really closely with the Real Estate Institute, and I know of other industry associations. Would you say that the government has been consulting with industry over that time?
I wouldn't say they've been consulting. The announcement of the budget on the 18th of June was a real shock to everybody, because we've never had any mention by the Liberals of the aggregation coming out. So that was a real concern, particularly when for over a day we've been encouraged to structure rental properties in a particular manner. So for that to come out with no real information, just the broad announcement, it really sent shockwaves through the system. And industry is used to being consulted, so whether you're with the law side like myself, or whether you're the finance industry like yourself, RESA, of course, you would typically expect those groups to be consulted first, whereby they're told about this proposal and they comment on it first. Obviously, if they had a chance to do that, they'd be saying just don't do it. So it just came out, and that caught everybody off guard. But I think despite not being consulted, these industry groups have worked really tirelessly, and whilst
certainly been very vocal.
Been very, very vocal. That's right.
People don't seem that happy about it.
It's trending really well, but
yeah.
I think that's probably sort of helped in the last couple of weeks with some changes that have come through.
Yeah, so what we actually saw, that state budget, the government announced that was planning to raise about $40 million of revenue through the aggregation measures. We've since found out that their estimates were incorrect, and they were actually going to raise about $120 million, or I think $118 million to be exact. So obviously their estimates were way out. So what they did was they have conceded to bring the top rate down to 2.4% instead of 2.9%. And instead of raising the $40 million that they said they wanted to raise at budget day, they are going to raise about $86 million from the aggregation. So there's still more than double what they initially said they wanted to raise. So there's obviously still a lot of controversy about it. And thanks to Commercial and Legal, which is Elias's law firm, we've been running a survey which was created by Commercial and Legal. Yep. So do you want to share us through some of the results from that, Elias? This is lots of finance professionals have been involved in this, and if you do want to have your say, it's not too late. You can actually access the link to the survey on the website landtaxsa.com.au. So please feel free to go to that site and contribute to the survey, but let's just hear what some of the people have been saying through the survey.
Yeah, look, the survey was created to really try to understand people's view on land tax, because there's a lot of vocal people who've got their opinions, but we really wanted to understand what individuals had to say and get that real raw data. So really interestingly, from your survey, Marissa, we've got 55% of people who respond to the survey are mum and dad investors, and they're obviously ones that we care about quite considerably, given that the margins in rental properties aren't always that large. And then 22% were business owners who provide services within the real estate industry, and obviously quite keen to make sure that mum and dad investors are still active. And then from those respondents, 58% owned properties with land values, that's land, not capital values, of under 1.3 million.
Yep.
And 28% owned properties of more than 1.3 million. So we've got a very large number there with investment properties who would be affected by this aggregation. And 89% said that they actually understood what the reforms are going to do, which is always, it's really important, because when there's new laws coming out, you want to make sure that people who are saying they don't like it understand what it actually means.
Yep.
So 89% said that they felt quite comfortable, they understood how the reform is going to work. And then knowing that, 97% staggeringly said that they just simply don't support the changes. Right.
Yeah, so that's pretty alarming. Obviously, 97% of the respondents to our survey are against the changes, and of that, 55% identify themselves to be mum and dad investors. So that's obviously pretty alarming to us, and that's why we're continuing, I guess, to advocate on behalf of our clients. As Elias, I know, is advocating on behalf of his clients, and lots of industry bodies are advocating. So that's what today is all about. I found one of the interesting statistics from the survey was that 64% of the survey respondents said that they actually voted for Liberal in the last election, and that if these new laws are passed, that they will not vote for Liberal again in the next election. So I just find that, an interesting sort of statistic, and obviously, this is causing a lot of grief for the Liberal Party at the moment. But let's move on to the facts. So
Sure.
The draft bill has been released
Yep.
to the public
That's right.
was it about 10 days ago that came out, Elias?
Yeah, on the 9th of the 19th.
Oh, yeah,
So,
okay. So we've got the draft bill now. We know roughly what it's going to be. Now, the process moving forward from here, what does that look like?
Yeah, so now that there's a draft bill, this is when consultation is starting. It's unfortunate it didn't start before this point, but it starts from this point formally. It's not an industry consultation, it's a public consultation, which means you at home get your say the same as industry, which is fine but quite unusual. Usually you would have industry consultation first. So the process from here is that anybody can have a say. In fact, the government's website is called yoursay.gov.sa.au. So if you go on the Your Say website, you'll have to navigate through it to find it, but you'll be able to go in there, read a bit more information, and have your say whether you support it or not. All the submissions are due by the 2nd of October, which is not very long. So from the 9th of September
got really a couple of weeks to
the
go.
2nd of October,
So
it's less than a month, and obviously trying to understand this legislation can be somewhat tricky. But so submissions are due very soon,
Yep.
And then from there, the state government will probably look to understand those submissions, take on board some of those comments that they may agree with. Further revise the bill before they table it before Parliament,
Yeah.
which we expect may happen as early as November.
So basically, we don't have long, right? So if you want to have a say, then you need to get in quick. That's basically the bottom line. So I'm really keen now to drill down into the detail of what the draft bill says. Obviously, I know that you've been doing a lot of work on this and that you understand the draft legislation. Can you share with us actually what it says and what it means for individuals, for trusts, for companies? Just give us the brief sort of rundown of what the draft legislation is actually saying.
Sure. Well, we'll start with individuals because that's the easy one. So at the moment, the Land Tax Act talks about taxing properties owned by specific groups. So they won't amalgamate your properties if you have interest in multiple groups. So if you own a property on your own, that gets an assessment. If you own a property in partnership with somebody or with your spouse, that will get a separate assessment. So what they're now saying is, well, no, I think that's a bit unfair because you own all of that property and half of that property. What I'm going to do is I'm going to assess you on 1.5, not the two separate assessments, because land tax works as a scaling increase. So obviously the more you own, the more you get taxed. It's quite often referred to as a wealth tax, which is why so many people oppose it. So that will hurt individuals who have to date been able to pay a lower amount of land tax because it's held with other people, and it could be held with other people for various reasons.
So that's a really good point that I think we should point out, is that people have probably got the assumption that this is only affecting investors that hold property in trusts and companies, but it's also affecting investors that hold property jointly with another individual. So it could be a husband and wife owning property jointly. So that's a really good point that, you know, people should be aware of, I guess.
Correct. So individuals will be grouped together there, and it's quite complicated because they'll issue a assessment to the husband and wife, and then tax individually the husband and wife and give credit. So it's actually quite tricky how they plan to make it work. But what that really means to the state government is more land tax revenue, pure and simple. So that's it on an individual basis. On a company basis, companies, interestingly, we find aren't used all that much with owning property because they don't get the benefit of capital gains tax reductions. But to the extent that companies are being used to hold properties, if there's multiple companies that are ultimately controlled or influenced by the same people, then they'll be grouped as one, and they'll get one land tax assessment rather than getting their individual assessments they currently get. And then with trusts, there's two different approaches there. Some trusts are like companies, like your unit trusts and your fixed trusts. So those ones there will be assessed based on your percentage interest in that trust, and that'll be grouped with all your other assets. So there's obviously even more significant effect for individuals who have an interest in a unit trust. And then with discretionary trusts, what the state government will do is effectively ask you to nominate somebody. So you might nominate yourself or your spouse or somebody else who's over the age of 18 years old who's in your trust. And then they will have that trust asset grouped with their own personal holdings. And if you don't nominate someone, then they'll hit you with a surcharge as a bit of a penalty for not making a nomination.
So I think what is clear is that it's very complicated.
Yes.
You know, they're obviously we're taking the current land tax structure, which is relatively simple, and we're complicating it quite significantly. Would you agree? Yeah,
absolutely. And it's convoluted, and it's really hard. Talking as a lawyer, it's really hard to actually understand the backs and forths and the loops around and how it actually works and where it ends up to. But ultimately, what it does is end up with, as you said earlier, more land tax revenue for the state government.
Yeah. So I guess, you know, one of the things that I want to drill down a little bit further, we've touched on it, because I think a lot of investors that will be impacted do probably hold property in trust. And you've sort of mentioned that there's two options for people that hold property in trust. They can either nominate a beneficiary of the trust, in which case that individual will have the land of the trust aggregated with their individual holdings, or they can choose to pay a trust surcharge. Can you just explain a little bit more around that, and whether that's an optional voluntary thing or whether it's compulsory, and what sort of surcharge will be applied? Can we just drill into that a little bit further? Yeah, sure. So the nomination is not a simple process, and even working out whether you want to nominate one of your beneficiaries to take the land tax hit requires real close consideration, because if you're going to do it, you're going to do it because overall your land tax is going to be less by nominating and not paying a surcharge. So because it's quite complicated, individuals are going to have to look at their portfolio, look at their trusts, and make an assessment on, do I nominate somebody? And that process for nominating on the current legislation requires you to pick someone before the 30th of June next year, which is quite tricky considering that we're still at a draft bill stage. Yeah. It's still out for comment. It hasn't even been put before Parliament yet. So by the time this becomes actual law, you might only have a matter of 2-3 months to consider your structure and work out if you're going to nominate or not. I hope you're not planning to get any sleep during those months, Elias, because you're going to be busy advising clients. I think we'll be cancelling our leave around Easter, so that'll be a very busy period in terms of making those nominations. And obviously the flips of that is that if you don't make a nomination, you can't nominate after the 1st of July. And then you will be paying the surcharge rate, then you get which is an increased rate from what you would normally be paying.
Correct.
And what is the surcharge that they're talking about at the moment?
So the surcharge hasn't been put in the bill. We've got access to information from the Treasurer's Office, which suggests that the surcharge will be 0.5%.
Yeah.
So that's an extra 0.5% than what you would pay normally, which doesn't sound like a lot, but it actually is, considering that land tax average across the country is only 2.2.
Yeah.
So if you're paying an extra 0.5% more, that's a lot. That's a big number.
Plus, we also noticed that with the trusts, the bottom threshold, instead of it starting at 450,000, starts at 25,000. So
Yes.
effectively, you only have to own one property in the trust to start triggering that surcharge rate.
Yeah, correct.
I think thanks to Roo for posting the land tax rate tables that were seen in the Advertiser after the draft bill was released. So you can see those in the comments below. So check those out, because that will give you a bit of an idea what we're talking about. And also thanks to everyone that's joining in. I can see quite a few people are joining in. Hi Katie, hi Ben, hi Amanda, hi Karen. Thanks for joining us, guys. Hope that you're getting value. If you do have a comment or question, just put it in the comments below. Let's move on to, I really want to sort of understand a bit more about how the new proposed structure and the new proposed law compares to other states, because the government's been claiming that this is going to make South Australia more competitive, and they have quoted New South Wales and the Victorian model quite a lot. So could you just give us a brief understanding of, how does this compare to what they've got in New South Wales and Victoria, and are we actually competitive, or are we still lacking that competitiveness? Where does this put us if we actually proceed with this legislation?
Yeah, so out of all the states and territories in Australia, only New South Wales and Victoria currently have a similar land tax aggregation law in effect. Victoria brought theirs in 2005, New South Wales followed in 2008. So it's been 11 years and no one else has done it across the country, probably for good reason, actually. What they're trying to do is effectively mimic those laws here in SA on the basis of saying that is consistent and a fair approach. Probably the most substantial differences are going to relate to the thresholds of where land tax kicks in. So land tax is not a single rate for all property. You pay a higher level of land tax the more property you own. So at the moment, you don't pay any land tax for under 390,000, and our upper threshold is at 1.3, which might change to 5 million. If you look at these new reforms they introduced 10 days ago, they're suggesting that your land tax kicks in at 450, which is a bit of a win for some people, but that the highest bracket drops down to 1.1 million. Now, if you look at
1.1 million of land holdings, which is really maybe a couple of properties.
Yeah, it doesn't have to be much.
It doesn't have to be much to get to $1 million of land holdings. So you're already paying the highest land tax rate, which will be 2.4% against, based on this proposal.
Yeah, so that's their concession, is to drop it down to 2.4 from 3.7 that it is as of today. So in a way, it's a big concession, but 2.4 million at 2.4% at 1.1 million. Compared to interstate, and Victoria is the best example because a very similar system to ours of what's been proposed. Their largest and highest tax bracket is 2.25% for land tax. So it's about 15 points less than ours, but it kicks in at 3 million,
I think, yeah. So there's a big difference there.
Yeah, so if you pick the $1.1 million figure that we're going to kick in at, and applied it to Victoria, I think they're only sitting at about 0.8% at 1.1 million.
Compared to our 2.4%.
Compared to our 2.4.
I saw Elias just presented a great presentation at the Real Estate Institute, and I saw he had a great comparison table comparing the some 8 different scenarios with what the land tax would be in South Australia with the new proposal, what it would actually be if that exact same person and those exact same properties were in Victoria, and what it would be in New South Wales. And what was clear to me was that in every instance we were still very uncompetitive compared to those states.
Yeah. So in a nutshell, as we stand today, so based on the current land tax reforms that we have, we are completely out of the ballpark, uncompetitive. These
even though we're bringing the rate down to 2.4, still uncompetitive. Even
with the reduction, we are still largely uncompetitive with the eastern coast. not just because it's 2.4 versus 2.25, and incidentally New South Wales is 2%, and our national average across all of Australia is only 2.2, so we're above the average. But it's because our threshold, it kicks in at 1.1 million.
Yeah. I'm kind of the view that, especially for residential properties, I sort of think that we're more competitive with our current land tax structure. Even though the rates are higher, the ability to be able to structure your properties in different ownership entities to be able to reduce your land tax means that South Australia is currently more competitive than what it will be under the new proposed reforms. Do you sort of have a view on that?
Yeah, so it depends what end of the spectrum you sit. So,
yeah.
So most of us will sit right in the middle, and I'll emphasise that because there are some winners in this. So the winners are the ones who have an investment properties or two small investment properties that miraculously sit somewhere between 390,000 and 450.
And so I think the government said that there's about 9,000 of them.
Correct.
So 9,000 investors that have land holdings between 391 and 450. And how much are they going to save per year?
They'll save a whopping $295 per year.
Wow. They'll be able to go out for dinner with that amount of money.
Correct. So
we do have 9,000 people in South Australia saving $295 a year, which I guess is something.
Yes, not that they've asked for the savings.
So who else are the winners?
The other winners are the larger property owners on the upper end of the spectrum who, per individual property, particularly commercial properties, are worth more than 1.1 million, or in fact worth more than $5 million. So
I sort of in your presentation you mentioned the Westfield example.
Yep.
So obviously companies like Westfield will really benefit from this, and I think you estimated a land tax saving of over $700,000 a year for companies like Westfield. So obviously at the big end of town there is some benefit there.
Yeah, correct. So at the big end of town, if you own very expensive property, you're already in the top threshold. So
yeah.
You're not getting the benefits of the lower steps to get there. You're just there immediately. So from your perspective, you're saying, well, I'm paying 3.7% at the moment. Previous announcement last year was a drop to 2.9. You're now giving it to me at 2.4. They've got massive savings to make. So the winners from this will be, as I said, primarily those ones with individual parcels that are worth several $1 million and above.
So then we've talked about the winners. So who are the losers then?
Well, the losers will be everybody in between.
So in between, say, let's give a range. So let's say between sort of 1 million and 5 million. Would that sort of be the pocket of real sort of people that will suffer from this?
It really goes not so much by how much you own. It will go by the value of those properties.
Yeah.
So if you've worked hard to pick up small residential investment properties, or possibly even a small commercial property that have land values of under, based on today's rates, under sort of 1.3 million per property, and it's very hard to have a residential home where the land value is worth more than that anyway. Those are the ones that will suffer the most because individually they won't be able to have them in trusts or split with their husband or wife or other people. So it'll really go by the value of your properties rather than the combined value of those properties. The combined value will have an impact as well, but it'll really go by what size properties you own, unfortunately.
Yeah, and I think, what was alarmingly clear when I saw you present to Marissa was that it is really, like we said, it is really complex. So it's really hard for an individual to actually calculate what their new land tax bill will be because of the complexity of this new draft legislation. So that does make it really difficult. And I guess we do have the added element of revaluations happening, which I just might touch on for a second because that's going on. It's a separate thing. But what does that mean? Like, what does revaluations mean and how does that impact land tax? And how can that also impact what we're talking about here if this aggregation model also proceeds?
Yeah, so the revaluations are completely separate to this hype about the land tax changes. So a few years ago, the Valuer General and the state government at the time worked out that they're not collecting enough money because rates aren't as high as what they could be. And so they've invested time and money, and this year they've started rolling out what we call a revaluation process where they're going council by council and revaluing every single property in that council region. residential properties, commercial properties.
So everyone in the state can expect their property values to be reassessed by the Valuer General
100%.
over the next 2 to 3 years, is that right? 2 years or so?
It's over 3 financial years, including this one, so
Yeah.
2 more,
Okay.
2 and a bit more to go.
So that will impact council rates,
It'll impact
emergency service
everything.
levy, water rates,
Land
land
tax.
tax. Have I missed anything?
Yeah. So,
Yeah.
so obviously land values will be reassessed, and that's going to affect your land tax. Capital values will be reassessed, which is going to affect your council rates. Indirectly, your SA Water and your ESL gets affected by all of that as well.
So would it be fair to assume that people will have an increase in their land tax bill because of the aggregation that's being proposed, but they'll also have another increase in their land tax bill because their property gets revalued significantly higher than what it currently is?
Correct. So the revaluation is already legislated, it's already underway. Most people don't know about it.
Yeah.
So that's already going to hit the property industry. And unfortunately, what industry has tried to do is encourage the government to delay the introduction of these land tax reforms to allow everybody to get their reassessments, look at how that's impacted their portfolio, and adjust from there before we start to get aggregated as well.
So do you think, if you could sort of wave a magic wand and say what you wanted to happen, do you think then that delaying the implementation of an aggregation model or delaying this reform until the revaluations are complete would be the way to go?
100%. I mean, we've got a very stable property market in South Australia, probably the best in the country actually. So we don't get massive peaks, we don't get massive troughs. We've got a very reliable market. When you introduce too much uncertainty, people start to
Panic?
Panic. I was going to say react, but panic's a good one. The revaluations, because you don't know what you're going to get, it's like a lucky dip. That really needs to take its course. And even though they've started this financial year, they've only introduced it to 3 councils, and there's quite a few to go. So that process will take, as I said, 3 more financial years. It's going to result in a huge increase in rates and taxes to all the relevant authorities anyway.
So it might be that the government might actually collect what they needed to collect via that revaluation process without having to look at land tax as a way to collect more revenue. Would that be something that you think might happen?
Yeah, well, they're going to collect more land tax because the land value is going up. So they're going to collect more there.
Yeah.
This aggregation just adds more into the pot, but it's particularly considering we're saying that it's the people in the middle who are going to be affected the most.
Yeah, which
They're
is your
gonna
typical mum and dad investors.
Correct. They're going to get hit twice.
They're going to get hit twice. So I think, we've covered a lot. We're sort of running out of time. I just want to leave you with, if you are concerned, if you do want to have your say, like I said, visit landtaxsa.com.au. You can sign a petition, you can complete the survey. Also encourage you to reach out to your Member of Parliament because, as Elias said, if the government does put this through to Parliament, then the MPs will have to vote on it. So it's really important for them to understand where their members of their electorate are sitting and what they feel. Both Liberal and Labor parties are having forums on this topic, so that's really good to attend. The details, there's a Labor forum coming up on Monday. The details of that are on landtaxsa.com.au, so you can get the details there and register for that one as well. But definitely I think what people are going to need to do if they are concerned is get some legal advice. And, that's probably where Elias and his team come in at Commercial and Legal. But I do encourage you to probably sit tight and try not to panic too much between now and the time that the legislation is implemented, if that happens, just so that we know actually what's happening, because getting advice prior to that would probably be a bit premature. Would you agree, Elias?
Yeah, 100%. Right now, industry is trying to oppose these changes, so I think that's probably the best approach to take for the time being, and we'll know in due course. I'm sure you'll keep your people up to date, Marissa, that once we know it's going to go through, we know a bit more about what it's going to look like, that's the time to start planning. But in the meantime, I think the best thing people can do is, if they're concerned about their portfolio, is as I said, make your voice heard. Go to the government website, speak to your local MP, and give them a real example of your portfolio, what your cash flow position is out of it, which obviously can be very sensitive. So, an increase of $10,000, $20,000, $50,000 can really hurt people's cash flow.
Absolutely.
Those real examples, I think, will go a long way.
I mean, this will impact lives negatively. We talked about the people that will benefit, that will save $295 a year, but on the other hand, we've got a small amount of investors that are going to experience increases of $20,000 a year or in excess of $20,000 a year to their land tax bills. So it's, there are people that will lose out of this. So it's really important to have your say before it gets implemented. Was there anything else that you wanted to add, Elias?
No, it's obviously a very complicated space, but hopefully everyone's got a good idea, and there's plenty of online literature. It's very difficult to read through, but certainly reach out if you've got any concerns.
Well, we do also have the link to the draft bill on the landtaxsa.com.au website as well. So if you want to have a read of that, then you're free to do that. But that's all we've got time for tonight. Of course, we're here all the time to answer any questions that you have, and any questions that we can't answer, we can refer them to Elias and his team. But definitely, we are here by your side to help you through the whatever happens over the coming months and years to ensure that you are best placed to be able to cope with whatever comes your way. So that's all we've got time for tonight. We'll see you again next time. Thanks for tuning in. Bye.
Bye.